For many successful families, a large portion of their wealth is not sitting in a brokerage account. It is tied up in businesses, commercial real estate, farmland, or private investments. These assets can be incredibly valuable. They often represent years of hard work, entrepreneurship, and long-term growth. But if they share one important characteristic, they are not always easy to turn into cash. Today, we're going to talk about alternative investments and illiquidity of assets and how wealth tied up in businesses, land, or even private investments can create unexpected financial challenges if liquidity planning is not a part of the strategy. Here's the mindset shift I want you to consider. Being wealthy on paper is not the same as having financial flexibility. Without liquidity planning, even families with substantial net worth can find themselves constrained when opportunities or obligations arise. Point number one, understand liquidity risk and alternative assets. The first step is recognizing that alternative investments often trade flexibility for long-term growth potential. Assets like private businesses, real estate, farmland, private equity even, they can really deliver strong returns and diversification. However, they typically require long holding periods and really can't always be sold quickly without significant cost. According to research from BlackRock, alternative investments often come with lockup periods or limited secondary markets, meaning investors may not have access to capital when they need it most. Here are some quick practical applications or actions. Identify which assets in your portfolio are illiquid and how long they typically take to sell. Understand any lockup periods or restrictions on private investments. Evaluate how much of your total net worth is tied to assets that cannot easily be converted to cash. Consider the potential impact of market timing when selling real estate or businesses. Illiquid assets can play an important role in wealth building, but they require intentional planning because they limit short-term financial flexibility. Point number two, plan for major liquidity events before they happen. Liquidity challenges rarely appear during calm periods. They usually arise during moments of transition like estate taxes, business succession, investment opportunities that arise, or your family basically needing significant capital for specific moments of time that are happening. Without advanced planning, families may be forced to sell important assets quickly or under unfavorable conditions. Research from the Federal Reserve Survey of Consumer Finances shows that many high net worth households hold the majority of their wealth in non-financial assets such as private businesses and real estate, really making liquidity planning a key part of financial strategy. Quick practical actions. Model potential liquidity needs for estate taxes or generational transfers. Prepare for potential business transitions or buyout scenarios. Consider lines of credit or lending structures backed by existing assets. Plan ahead for large family financial events such as education funding or philanthropic commitments. The goal is not to sell valuable long-term assets prematurely. It's to ensure that cash needs can be met without disrupting the broader wealth strategy. Point number three, balance long-term assets with liquid reserves. The final piece of the puzzle is maintaining balance between long-term growth assets and accessible liquidity. Alternative investments can provide diversification and return potential, but a portfolio that becomes too concentrated in illiquid assets can limit flexibility. According to research from JP Morgan Asset Management, maintaining adequate liquidity reserves allows investors to manage volatility, meet unexpected expenses, and avoid selling long-term assets during unfavorable market conditions. Quick practical actions. Maintain liquidity reserve aligned with expected spending needs, diversify across both public and private investments, and then periodically rebalance the portfolio as private assets grow in value. Evaluate whether new investments increase or reduce overall liquidity. When liquidity is properly managed, families gain the ability to respond to opportunities rather than react to constraints. Because financial strength is not just measured by net worth, it's also measured by financial flexibility. So consider these questions this week. How much of my net worth is tied up in assets that cannot easily be converted to cash? If a major financial need arose tomorrow, how quickly could I get access to capital? And does my portfolio provide both long-term growth and short-term flexibility? Illiquid assets can be powerful wealth builders, but without thoughtful planning, they can also create unintended financial pressure. Businesses, land, private investments often represent the most meaningful and successful parts of a family's financial story. The key is ensuring those assets are supported by a strategy that preserves flexibility alongside of growth. And with thoughtful liquidity planning, it is possible to maintain long term investments while ensuring the family has the financial freedom to navigate opportunities, transitions, and unexpected events with confidence. If this conversation resonates with you and you'd like help evaluating liquidity of your profile, businesses, land, and private investments, they really often represent the most meaningful and successful parts of a family's financial story. The key is ensuring those assets are supported by a strategy that preserves flexibility alongside of growth. With thoughtful liquidity planning, it is possible to maintain long term investments while ensuring the family has the financial freedom to navigate opportunities, transitions, and unexpected events with confidence. If this conversation resonates with you and you'd like help evaluating the liquidity of your portfolio, we'd be honored to help. At Stevens Capital Partners, we work closely with individuals and families to design strategies that balance long term growth with financial flexibility. If you found this episode helpful, please like this video and subscribe below so you don't miss any future videos. I'm David Stevens with Stevens Capital Partners. Thank you so much for tuning in, and we'll see you next time.